Good morning, guys. A very good evening to everyone. So let's wait for a while. Let's wait for a couple of more minutes and then we'll start. Sure, VT. Just go through the recordings and let me know. Okay. So today we will be starting. Oh, okay. Someone has asked me to explain about open market operations again. So sure, I'll explain about open market operations again. Just give me a second. So open market operations. Open market operations are nothing but buying and selling of securities and government securities. Buying and selling of government securities by central bank is called open market operations. Now, whom does central bank buys and sells securities to? To other commercial banks, to common public. Now, now the question is when a central bank would buy a security and when a central bank would sell a security. No time. Sukriti, tell me if you want to spend more, if you want to spend more money in the economy, will you be buying things or will you be selling things? If you want to spend more in the economy, will you be buying things or will you be selling things? So when central bank wants to supply money in the economy or boost the supply of money in the economy, They are selling things in the open market. And sorry, sorry, my bad, guys. Please be back. When central bank wants to increase the supply of money, what they do? What they do? They buy government securities. When central bank wants to increase the supply of money, they will buy government security and supply what? Supply money in return. That is why the supply of money will be infused in the economy. What is happening? Central banks are buying government securities and paying money in exchange of it. If they are paying money, supply of money is increasing. On the other hand, if central bank wants to pull out money out of the economy, then they will be selling the government securities. So central bank selling government securities to commercial banks, and in return commercial banks are giving central bank the money in exchange of those securities. So this is how money is getting sucked out of the economy and money is available with the central bank. If central bank wants to follow an expansionary monetary policy, then central bank will increase the supply of money, buy government securities and supply money to the commercial bank. Are you getting this? Preeti, have you got this? Now, now, when central bank reduces interest rates, when central bank reduces interest rates, the process is called quantitative easing. The process is called quantitative when interest rate is reduced, the demand for money rises and there is more money available to the people in the economy. This would increase the supply of money in the economy. Similarly, now you should get a poetry out of this, that if interest rates, Prachi, it is very simple. If interest rate are falling in the economy, if central banks are decreasing the interest rate in the economy, it is called quantitative easing. When would central bank follow the process of quantitative easing? In order to increase the supply of money in the economy, because if interest rates are available at a cheaper cost of capital, everyone would demand more money and there would be more money to spend for the people. If there are more money to spend for the people, there is more supply of money, and if there is more supply of money, the business and the institutions will ask for more money, expand their businesses, people will spend more, and it is an example of expansionary monetary policy. Are you comfortable over here, Prachi? Perfect. Next, next, if banks hold excess reserves with them, if banks hold excess reserves with central bank, central bank pay interest in return. If banks hold, if banks hold excess reserves with central bank pays interest in return. So increasing the interest rate on excess return would be an example of what? And decreasing the interest rate on excess return would be an example of what? Increasing the interest rate would be an example of, very good guys, it would be an example of contractionary monetary policy, and decreasing the interest rate, as you know, it would be an example of expansionary monetary policy. Why? Because when central bank is reducing the interest rate, bank would take out their excess reserves, bank would have more money to supply to the common people, and that is why it is it is correlated to increasing supply of money. So increasing supply of money is always related to expansionary monetary policy, whereas decreasing supply of money is always related to contractionary monetary policy. Okay. Now, NB, please tell me, if central bank is paying higher interest rates, will you be keeping excess reserves to the central bank, or whether if they are paying lower interest rate, then you will be keeping your excess reserves to the central bank? As a banker, think about it. If they are paying higher interest rate, then you will be keeping your excess reserves to the central bank, or whether if they are paying lower interest rate, then you will be keeping your excess reserves to the central bank. At a higher interest rate, you will keep your excess reserves to the central bank. You won't have money to distribute to the common people. And that is why it is an example of contractionary monetary policy, because following this measure, central bank tries to reduce the supply of money towards the common people. If interest rate is reduced in the market, bankers and commercial banks will take out the excess reserves and distribute it to the common people. And if central bank distributes this money to the common people, it would increase the supply of money, and that is why a expansionary monetary policy. Are you clear with this? Are you clear with this, NT? Sorry, NB. NB, are you clear with this? Now, some countries like Japan follows the process of negative interest rate. What does that mean? It means that if you are keeping your money in the bank account, your money will not increase, but it will decrease. So taking interest rate to such a low extent where it becomes negative is an example of unconventional monetary policy. Some countries like Japan has a concept of negative interest rate and taking interest rate down so that it becomes negative. That is an example of unconventional monetary policy. When the interest rate are reducing, central banks supply money to banks with an interest rate, but banks supply us with different rates. What do we want with the original reduced interest rates? That is not practically possible in B. What are banks for? This is not a cloth market where you can directly get the material from the wholesaler. This is not how the economy works. There is always a regulation. There is always some mandates that a nation need to follow. So I think NV is asking that central bank gives the money to commercial bank at 8%, and commercial bank gives it to us at 10%. Can't we directly borrow from central bank at 8%? What can we do about it? Can we borrow at a originally reduced interest rate? The answer is no. So please don't. If this would have been possible, all the banks of the nation would have been shut, right? So NV, again, banks are an oligopoly business. And not only different banks, but the same bank would give me interest rate at a different rate and you at a different rate. Your CIBIL score might be different from my CIBIL score. So if I have a good CIBIL score, uh, I will get the loan at a lower rate. If I have a greater CIBIL score, if I have a lower CIBIL score, I will have to pay a higher interest rate for the loan. So NV is asking that why different banks have different interest rate, because again it is an oligopoly business. The prices are determined by the banks based on this regulation that they follow, and again based on their positioning, based on the demand of money that they receive. Not everyone in the market will price their product same, right? They have a right to price that product at whatever price they want, but since this is a regulated business, RBI decides that what price band should be there. Yes, banks have limit the price that you will decide or the interest rate that you will decide on the loan amount will be determined by the RBI, and it should be according to the norms. Because why Japan has negative interest rate? Because once Japan was in serious recession, and to fight recession, it was essential for people to spend. Now, it was being seen that Japanese were saving more and spending less. Because of that, there was a recession in Japan. So, to encourage people to spend, to encourage people to spend more, and when I say by spending more, I am talking about the businesses to expand more on capex and other things. To encourage people to spend, Japan introduced the concept of negative interest rate. So you be saving in your bank account, Priyanka, if there would be negative interest rate, if you will be losing your time value of money, you would be you would be eager to spend it, right? You would be investing it in such a way that it multiplies itself. So that is why Japan introduced the concept of negative interest rate. So there is RBI website. You might have heard various other advertisements related to RBI that RBI promotes. You might have heard about one of the advertisement which says that never share your OTP or any PIN to anyone asking to cover your credit card or debit card while making the payments or using the ATM. So those are the RBI norms that RBI promote. You can go to RBI website and have a look on it if you want to see all those norms. But again, the minimum percentage that bank needs to give with the what is the minimum percentage that commercial bank needs to give with the central bank. Okay, I'll come to that. So in Japan, I took a loan at 9%. So it will reduce to 8%. Does it work like that? First of all, let me come to Soumya's doubt. I'll come to Priyanka's doubt. So it does not work like that. It does not work like that. I have taken loan at 9% and it will go to 8%. The concept of negative interest rate is, let's suppose you have invested 1,000 in your savings account. And if there is 1% negative interest rate, so 10 rupees will be deducted from your account every year. 10 rupees will be deducted every year. Guys, any doubt in this? Okay. So Priyanka asked a doubt. What is the minimum percentage? What is the minimum percentage that commercial bank needs to keep with central bank? I'm not sure, Priyanka. But I guess the CRR that we talked about yesterday has a range. Different banks follow that range, and I don't know. It may be 2% or 4% something. So it would be in a range of 2% to 5%. Just Google it and let me know. So I'm not very good with numbers. So I don't actually remember, but I think it should be, guys, any one of you, please Google that. What is the minimum percentage that commercial bank needs to reserve with central bank? Okay, it's 4%. PT is saying it's 4%. Thanks, PT. So Priyanka, it's 4%, 4.5%. Okay, it's around 4 to 4.5% as per Google. Okay. Now, what is negative interest rate? Again, I am explaining. Someone asked me to explain this again. This 1,000 rupees is invested in savings account since it has a negative interest rate. Rather than getting this 10 rupees, rather than getting this 10 rupees as an interest in the next year, no, norms are same for all. So the if central bank is saying that you need to reserve at least 4.5%, then you will have to reserve 4.5%. Norms are same for all. Might be. NBFCs are non-banking financial corporations. Probably they might have a higher cash reserve ratio, higher than the normal banks. Now, now, if there is negative interest rate, instead of getting the interest will be deducted out of your savings account, and that is what the concept of negative interest rate is. Okay. Now, now this monetary policies are followed with respect to inflation targeting. Now, what is inflation targeting? Consider this that US government has set has set that the target for the given year is 3%. The target for the given year is 3%. What is this 3%? Can I say this 3% is anticipated inflation? This 3% is nothing but anticipated inflation. This is the inflation that is expected by the US government. But if, let's say, there are two scenarios. One, when inflation is 4.5%. Scenario two, where the inflation is 2%. In what scenario would the government pull the money out of the economy, that is decrease the supply of money, and in what scenario would the government try to infuse the supply of money? Guys, if inflation is 4.5%, in what scenario would the government increase the supply of money, and in what scenario it would decrease the supply of money? Okay. So basically, government carries out, all of you are right, in 4.5% case, they will try to reduce the supply of money so that people spend less, demand falls and prices fall. In this case, they will increase the supply of money so that demand rises, people are spending, and prices rise. But one thing that you need to take care of and think about is that central bank make monetary policies based on inflation targeting as well. Based on inflation targeting as well. On the other hand, central bank should be independent from any political influence. For an economy to prosper, it is very important that central bank should be independent from any political influence. Now, with this, we will be coming to the conclusion of monetary policy by discussing at last that what are the limitations of monetary policy. Anyone can think of any limitations? Anyone? Can you think of any limitations? The first limitations is it is the monetary policy or the interest rate are lower bound to zero. Monetary policy and interest rate are lower bound to zero. It means that it is very difficult to maintain. Yes, that is actually the objective GA, not the limitation. It is difficult to maintain balance between inflation and interest rate is in our control. You mean, I think you are meaning to, you mean to say that it is difficult to manage control between inflation and unemployment. So interest rates are lower bound to zero. It is not advisable to take interest rate negative. Not advisable to take interest rate negative. Now, there are lags in implementation of monetary policy. Now, what does this line mean? Lags in the implementation of monetary policy. It means that if I'm implementing a policy on 31st Jan, it would take some time, 3 to 4 to 6 months, to get the policy implemented. That is, it would take 31st July to get this policy implemented. Do you think this is true? That is why implementation of monetary policy suffers with a lag. Now, also, there is uncertainty in transmission mechanism. It is not advisable, sorry. Uncertainty in transmission mechanism. Let's suppose you have transmitted for interest rate to be lower, but you don't know how households, how businesses, and how the citizen of a nation would react to it. Now, changing interest rate has also an impact of financial markets. Now, think about this. What would happen if interest rates are increased? What would happen to the stock market of that nation? Yes, that is what I am talking about. That that the change in interest rate also has the impact on financial markets of the nation. Interest rate are rising, the stock market would fall simply because the discount rate is increasing and it would lead to the lower intrinsic value of all the securities. To converge the market price to intrinsic value, people will sell security. There would be more supply in the economy. And because of that, the stock market would fall. Now, now think about it. What would happen to the Indian stock market if US Fed, if US Fed increases its interest rate? If US Fed increases its interest rate, what would happen to the Indian stock market? Indian markets would fall. Most of you are saying so. Okay, that is good. But why? Why it would fall? What is the logic behind it? Very good. Very good. So there is someone called as foreign institutional investors. Foreign institutional investors. They invest in different markets, emerging markets as well as developed markets. They invest in emerging markets as well as developed markets. Which market? So if I give you an example, emerging market is India. Let India be the representative of emerging market and let US be the representative of developed markets. Which market is more safer to invest? Which market is more safe to invest? US. Which market has a higher return? The Indian market would have higher return. Now they invested in India to get higher return, right? But since US Fed had increased the interest rates, since US Fed has increased the interest rate, they will pull out the money from Indian markets and invest in US market because they are getting better return at a lower risk, at a lower risk. So what they would do, they would pull out the returns, that is that they would pull out the investment that they had made in the Indian markets and invest in US government securities at a risk-free rate, or invest in US with a risk premium so that they are able to get the better return. Next, so one of the limitations was financial market distortions that can impact. Now, the next limitations is this monetary policy have limited impact on real variables. Real variables like consumption, and investment. A study in economy shows that it won't matter whether you are giving 8% return or whether you are giving 6% return. If a household spends, and that I feel is practical, if a household spends 60% or 80%, let's say, of their total salary, it doesn't matter whether they will get 8% return or 6% return. They won't be spending 40% of that salary and saving the rest 60%. So the impact on our lives for changes in interest rate is very much limited. Do you guys agree to this proposition? Do you guys agree to this proposition that the changes in interest rate has very limited impact in our lives? So Soumya, what they are saying is, if your household spending is 20,000 per month, whether interest rate is 8% or 6%, it won't change much. It would have a very little impact on your household savings. Your household savings won't deviate from 20,000 per month. You still will eat same food. You still would go for same shop to wear clothes from. You will still invest same amount of money that you have planned to invest, whatever the interest rate may be. That is why it has a very limited impact on real economic variables. This is what this point says. Are you there with me, Soumya? Okay, just give me a second. Now, also monetary policy also monetary policy has dependency. Monetary policy has dependency on intermediaries. Monetary policy has dependency on intermediaries. Question is how? If interest rate reduces to good extent, then there are chances that consumption will increase. But so interest rate is always reduced in basis points. So you will never see that from 8%, central bank has cut down interest rate to 6%, because there is a huge impact of interest rate throughout the economy. And no government would want the financial markets to be volatile. A volatile financial market is a representation of higher risk. Are you getting this? So it is not possible to adjust inflation rate or interest rate to a very large extent within a very short period of time. Within a long period of time, yeah, after every 3 months, what government could do is hike up the interest rate to 0. To like 250 basis points. It can go for again 100 basis points. Again go for 100 basis points. In long term, yeah, they can create an impact, but in short term, they won't fluctuate interest rate much, or play with interest rate with a very huge difference. So monetary policy is dependent on intermediaries. Like central bank came up with a policy. Guys, is my voice not clear? Please let me know. Okay. So central bank, it's clear, Swapnil, probably there is an issue from your end. Now I think it would be better. So I will cover financial market distortions over here as well. Again, don't worry, okay? So if central bank has implemented a policy of interest rates cut down, right? But to implement this policy to the common public, more than central bank, banking and financial institution play a major role because they are the one who are interacting with people. So it would depend on bankers and the management of financial institution that how well they could implement the policies infused by central bank. That is why monetary policy is said to be dependent on intermediaries. Okay. Financial market distortion. Again, I am coming to that point. Now, what is financial market distortion? If you will see if interest rate has been cut down, let's say if rates have been increased. If interest rates have been increased, it means that government wants people to spend more. Government wants businesses to expand less. Governments don't want businesses to spend more and people to spend more. When businesses spend less, when business spend less, they would earn less. People would have less money and there would be less demand of product. Ultimately, the prices will fall as well. But when earnings are less, would anyone be invested in a company with which is seeing a fall in earnings? Let's suppose in the first year, your company made 1,000 million profit and many investors invested in it. In the other year, your your earnings went down to 750 million. Would the investors still be invested in it? The answer is no. They would sell their investment and try to look for better revenues. Similarly, all the companies in an index, if they perform less than the historical averages, people will be selling the securities. And when people sell securities, markets and indices fall. KK, are you clear with this now? What is financial market distortion? And that is financial market distortion for you. Finally, on the other hand, yes, it is advisable for you to maintain class notes. PT, simply I am asking you that when you will invest in a company, when company will be earning more or earning less? PT, tell me when you will be investing in a company, when the company will be earning more or earning less? Prajwal, when the company will be earning more, right? And when the company will earn more? When the company will earn more? When they will get interest rate at a cheaper cost or at a higher cost? When a company will earn more? When they are getting the interest rate at a cheaper cost. So if government increases the interest rates, if government increases the interest rate, they are hampering the earning of the companies. And when government are hampering the earnings of the company, people would sell those securities in the exchange. If more and more people are selling, the stock indices will fall, the market will fall, and that is the example of financial market distortion. Are you clear with this? Are you clear with this? Next. Next is dependency on intermediary market. Will central bank be providing loans to common people? No. Who will provide loans to common people? Banks and NBFC, non-banking financial corporations, will be providing loans to common people. It would start next week. So banks and NBFC would be providing loans to common people, if you see. And can I say that these financial institutions which involves banks and NBFCs, these are the intermediary between central bank and common people and citizen. Can I say that? So this is what it means, that the implementation of monetary policy is dependent on these intermediary. These are intermediaries between financial market and citizens, and the implementation of the security depends on these intermediaries. Company gives dividend when the company share gets correction fight, then that also comes under financial market distortion? No. The reason being that won't come under financial market distortion is because the 5 to 10% dividend that the company is paying, you are getting that, right? You are getting that return. That is the return out that you are getting. So that is not the example of financial market distortion. NBFCs are non-banking financial corporations. Those are banking companies. Those are non-banking companies, but financial companies which are providing loans. Generally, NBFCs and returns through NBFCs are Aadhaar Housing Finance. Have you heard about it? Aadhaar Housing Finance is an example of NBFC. ICICI and HDFC are banks. They are commercial banks. Yes, Veera. Post office is not NBFC. Post office is not an NBFC. Yeah, there are various regional NBFCs as well. So Mahindra Capital or Aditya Birla Capital. I'm not sure whether Geo Finance provides loan or not. Bajaj is an NBFC, right? Bajaj Financer is an NBFC. So these are the examples of NBFC. Now decreasing interest rate also comes up. So Paytm Payments Bank was a digital banking platform that is not an NBFC, although there was various regulation associated to it and it violated some policies. That is why RBI shut down the operation of Payments Bank. IDBI is a bank. Earnings due to increase in interest rate as companies might set off their cost with some other components. GA, what happens? Even though using earnings to explain you was one of the example, there is something called as required rate of return. Don't worry guys if you are not getting this. Some of you might not get this because this is coming from valuation. There's something called as required rate of return. And one of the component of required rate of return is RF. The full formula is RF plus RM minus RF into beta. So if required rate of return is increasing, if you want more return from a stock, you will need to buy the particular stock at a lower price. Correct? Then only you will buy low, sell high, and generate a better return. And if RF is increasing, risk-free rate is increasing, it means that your required rate of return is increasing. So that would increase the discount rate at which the shares are priced. And if discount rate is higher, the value of the shares would be lower. So don't worry guys if you have not got this. Don't worry about this. We are going to discuss this when we will be discussing valuation in our next module. Okay. Next, if interest rates are decreasing, it also creates the chances of asset price bubble. Sorry. Someone asked me what is emerging markets. Emerging markets are nothing but the economies of developing countries like India, Pakistan, and other developing countries that you can think of. If interest rates are increasing, it would contribute to asset pricing bubbles. The same example that I gave over here, if interest rates are reducing, RE would fall because RF would fall. If RE would fall, the prices will increase, but this increase in prices of a security are not, this increase in prices are in security is not due to performance of the company. The performance of the company is still the same. This is due to changes in interest rate or the lower interest rates. So that is creating a bubble which would be eventually burst once the interest rate are increased in a given economy. RM is return from market. RF is risk-free rate. Think it like this way. Think it like this way, that if interest rate is rising, it means that there are higher returns on bonds, correct? Or government securities. If interest rates are rising, you are getting higher returns on government securities. Am I correct? But with higher returns in government securities are also categorized as the securities with lower risk. So if anyone would invest in equity market and assume higher risk, they would want a higher return as well, and return obviously greater than risk-free rate or returns in government securities. Are you getting this? Otherwise, why would anyone invest in equity market? Are you guys getting this? So if you want to get better returns in equity market, you will need to buy stocks at a cheaper price. So admin, the person who has connected from admin, if you get same return in government security and equity markets, well, where will you invest, admin? The person who has connected from admin, please let me know your name as well. He is asking me to repeat, so that's why I'm asking him that if he gets a chance to invest in equity markets and government securities. So Aslam, if both government securities and equity markets are giving same returns, where will you invest, Aslam? Think of it, Aslam. If you are getting same return in government securities and same return in equity market, where are you going to invest? In government securities. So can I say if you are investing in equity markets, you would want a higher return, the returns greater than government security? Can I say that, Aslam? Now, to get higher return, when will you get that higher return? If you buy the stocks at a cheaper price or if you buy the stocks at a higher price? When will you get that higher return? If you buy the stock at a cheaper price, if you buy something for 10 rupees and sell it for 30 rupees, you will get a higher return. or if you buy something for 20 rupees and sell it for 30 rupees, you will get a higher return. Obviously, at a cheaper price. So market adjusts those stock at a cheaper price so that it can incorporate the return that you need. So that is why when interest rates are rising, the share market or the stocks and of the security falls down. Yes, that is an investment strategy, and that has nothing to do with the interest rate envy. If the share market is going down, you will average. That is your personal call. Some might average, some might not average, because you don't know that how much it is going to fall. So that is something related to investment. That has nothing to do with financial markets. Now, how to determine whether the stock price is lower? There is the concept of intrinsic value. Again, don't go in that part, guys. That is related to valuation. We will be seeing that what is undervalued stock, what is overvalued stock when we will reach out to valuation. But by then, always keep on revising these concepts. Okay. So we will discuss that how we determine stock price is lower or how we determine that the stock price is higher. It is based on the concept of intrinsic value using valuation, that is DCF valuation. And we will discuss that in a different model, that is DCF valuation. Okay, Kriti? So that is why if interest rate is rising, markets are going down. And when interest rates are falling, market are going up. So prices are increasing, creating a bubble. When prices of the securities in the market are highly inflated, it is said that market is in bubble, and when interest rate will fall, when interest rate will rise, this bubble is going to burst. So potential of asset prices bubble is one of the limitations of monetary policy. And finally, global interconnectedness. Finally, global interconnectedness. Tell me one simple thing, guys. Someone from your class, I don't remember the name exactly, someone from the class asked me why the US dollars keeps on appreciating and why Indian rupee keeps on depreciating. First of all, everything is priced through currency. Everything is priced through currency. Everything is priced through currency. See this, guys, everything is priced through currency. But what is the price that you pay for currency? What is the price? Yes, and that is one of the reason. What is the price that you pay for owning currency? What is the price that you pay for owning currency? What is the price that we pay for owning currency? No, population is not the case over here. In fact, population is a source of human capital. So, what is the price that you will pay for money, owning that money? Can I say that price that you pay to get the currency or own the currency is interest rate? The price of every product is determined by the currency, and the price of currency is determined by the interest rate. So if I want to own rupees, I would have to pay a particular interest rate for it. If I have to own dollars, I will have to pay a particular interest rate for it. Correct? Do you guys agree with me that currency are priced at the rate of interest rates? PJ, if you want to borrow money, what are you going to pay on behalf of that? Interest rate, right? interest rates, right? So PJ, if you are going to bank, if you are going to bank and you are asking for 100,000 rupees, what is bank going to charge you on this 100,000? What will bank going to charge you on 100,000? KE is saying that when interest rates are low, then we will borrow money. It is not about you, KE. It is not about you or me borrowing money. It's about the one who need funds. Are you getting this? Businesses needs fund. Businesses, what do they need? They need fund, and they will borrow money no matter what is the prevailing interest rate in the economy. So can I say that everything is priced? Yes, if you are taking loan, you have to pay interest rate for it. But consider that you are not taking loan. Consider that you are not taking loan, and you are spending 5,000 rupees. You are spending 5,000 rupees. Instead of spending this 5,000 rupees, if you would have saved this 5,000 rupees and if you would have got 10% interest rate for it, you would have earned for 500 rupees for this. You could have earned 500 rupees for this based on 10% interest rate. Since you are not taking loan and spending 5,000 rupees, you are letting go of this 10%. So can I say this 10% is nothing but opportunity cost for you? This is the cost that incurred to you. This is the cost that you actually paid for spending this 5,000 rupees. So this is based on this same logic. Everything is priced by money and money is priced by interest rate. So if you want to know that what is of the worth of the money, what is the worth of the money, you will have to check the interest rate associated to that particular currency. Now US dollar might have interest rate of 3%. Indian rupee might have the interest rate of 9%. Indian rupee might have an interest rate of 9%. Be with me till here and please comment on one scenario. When would a product or a currency see its appreciation? When would a currency appreciate? When would a currency appreciate? Please be with me, guys. This is going to be very interesting if you try to understand it. When would a currency appreciate? If there is huge supply or lower interest rate, or if there is less supply or higher interest rate. When would the, let me say, currency appreciate or price of the currency go high? Think it this way. When will price of a product increase? When will price of a product increase? If it is in high supply or if it is in low supply? When is the price of a product going to increase? Similarly, when is the currency going to appreciate? When there is high supply or when there is low supply? When there is low supply for a product, when there is low supply for the product, don't you think people would need more demand for that product? People would have more demand for that product. When there would be low supply for the product, people would have more demand for that particular product. And if demand of something is higher, their interest rate would be higher. If demand of a particular currency is higher and it is limited in nature, people would be ready to pay higher interest rate for it. Think it this way, guys. Please think it this way. If demand of a product, if demand of the product is higher, supply is lower, people would be willing to pay higher interest rate for it. Can you think it like this way? Everyone with me? Everyone, please comment. If supply is less, demand is higher, people, I have less rupees in market and everyone want to AR, everyone want rupees and I have less rupees in the market because supply is less, demand is more. So everyone is willing to pay higher interest rate for it. Are you getting this, AR? AR, are you getting this? Who will you lend the money to? You will lend the money to someone paying 9% or someone paying 3%. You will lend the money to someone paying 9%, right? So less supply comes with higher interest rate. And as you guys said, if currency wants to appreciate, that is, if rupees wants to increase in value, it has to be in less supply. But if a currency is in less supply, it government need to hike their interest rate to make it less supplyable to people. If government to reduce the supply of money, they will have to hike the interest rate. Are you getting this? If government to increase the value of rupees, if government would want rupees to prosper, they will want to reduce the supply of rupees by hiking the interest rate. But hiking the interest rate comes with lower falling GDP and in turn lower unemployment. Correct? Are you guys getting this? It would come with falling GDP and lower unemployment. Because of this, government cannot keep on increasing the interest rate. Government cannot keep on increasing the interest rate. That is the limitation. Everyone with me? Everyone? Now, what is the other way? What is the other way through which government can improve rupees? Government can improve rupees by creating a higher demand as well. Creating a higher demand for rupees. How can government create higher demand for rupees? Think of it this way. Let's say you are an Indian manufacturing company. You are a manufacturing company based in India and you are selling something to China. You are selling something to China. You will receive money in which currency? You are going to receive money in which currency? If you say that China, please pay me my money in rupees, please pay me my money in rupees, China will have to pay you your money in rupees. Correct? And if and if and if China is paying you in rupee, they will have to buy rupee and sell dollar or sell yen. They will have to buy rupee and sell yen. And when people will keep buying rupees, and when people will, okay, yuan is the currency of China. Okay, and when people will keep buying rupees, don't you think rupees will appreciate? Don't you think rupees will appreciate? So increasing export is one of the way of of fighting currency depreciation and one of the best way of fighting currency depreciation. With this, If India is able to manufacture all its needs by itself, if India is able to manufacture all its need by itself, they won't be able to import anything from China or US. They won't need to import anything from China and US. And if India is importing from China and US, they will have to buy dollars or yuan. And if they are buying dollars and yuan and selling rupees, rupees is falling. So if India is manufacturing everything on their own, they don't need to sell rupees. That is why government is promoting a project called Make in India. Make in India itself. So that we are less dependent on the world. We as a nation or any developing nation is less dependent on the world, and their currency does not lose its power. That is why, that is why when you invest in a US company, yes, yes, that is the case, Aslam. And if you are investing in a US company and that company is giving you 12% return, and if US dollars has appreciated 3% or 4% in a given year, the effective return that would be available to you would be 16%. On the other hand, if a US citizen is investing in India and getting a 20% return, but the currency, if US dollars has appreciated 4%, rupee has depreciated 4%. So effective return that your US citizen will take home will 20 minus 4, that is 16%. So this is how global interconnectedness of interest rate make monetary policy challenging. So if interest rates keeps on reducing, your currency will see a serious hit in the economy or in the forex market. Your currency will lose its value in the forex market if interest rates is it's kept on reducing. Are you there with me, guys? So that was about monetary policy. Take a break, refresh yourself up, and then we will move to fiscal policy. Yes, Asif. If India exports more, yes, then currency appreciates. We will go to fiscal policy. Let's go on a 5 minutes break, guys, but be right back in next 5 minutes. Guys, regarding LMS and regarding internships or forage, please raise a ticket. I won't be the best person to assist you with. So yes, Sapur, we are on a break. Class note is not available in LMS. If available, where can I download? So please raise a ticket about it that class notes are not available and your issue will be resolved as soon as possible. I will transfer that ticket to the respective department and your issue will be resolved. Again, that as well, Asif, you can raise a ticket about it. Asif, please try to understand. I have never been the part of organizing these opportunities, so I won't be the best person to comment you on it. So please raise a ticket about it. And once the ticket has been forwarded to the respective department, someone from the representative team will be there to help you out. Because I guess it is one of the Gulf countries and they have a high mineral resource, high oil production, and everyone needs oil. Everyone needs energy. So people are buying from them. They are being getting paid in their currency, and that is why their currency is strong. Recently, India has made some agreements with the countries to accept the currency in rupees instead of dollars. So how it happens is it's not up to us whether we will be paying in rupees or not. The counterparty should also accept our payment in rupees. Simply the reason being, counterparty will only accept the payment in rupees if they feel that the underlying currency, is a strong position to hold. Why would you hold a depreciating asset? Or why would any country hold a depreciating asset? So in order for the currency to be strong, in order to so that counterparty accepts your payments in your home currency needs to be strong. Ours is not strong. Ours is not strong, but still, through some diplomatic policies, through geopolitical factors, government try to make the counterparty agree to accept the payment in rupees only. It is very much connected to different geopolitical factors as well, right? So if a country is accepting your home currency as their payment method, you would be supporting that particular country when they will be in need. So this is what, uh, based on the foreign policies of India, this is what India is trying to position himself. Why most countries using dollar to international import and export? Because dollar is a strong currency. You will see that dollar is appreciating with respect to every other currency. So that is the domination of dollar in the forex market. That is why every country is accepting dollar, considering that the rate of dollar won't fall in the coming time based on the historical performance that dollar has made. Shall we start with fiscal policy? If every one of you are back, shall we start with fiscal policy? Why dollars don't depreciate? Because dollar is always in high demand. Dollar is used as a medium of exchange by the currency, by the different countries of the nation. So this is actually interdependent. The dollar is not depreciating because people are using it, and people are using it because dollar is not depreciating. Yes, although many developed economies of the world are trying to create an alternative of dollar, let's see whether they will succeed or not. So let me start with fiscal policy. Now, what is the income to the government? Taxes are income to the government, and there are various expenses to the government as well. Now, how government manages, how government takes its income and expense decision. So TV, it won't be appropriate to comment for me to comment on cryptocurrencies, as I am no expert in cryptocurrency. But if you ask me on my personal level, I feel that crypto is a very volatile market. It assumes a highly risky and high bet investments. Uh, I don't know what uh, future does cryptocurrency market hold, but I think there are various environmental impacts of mining cryptocurrencies as well. Before investing in a cryptocurrency, you should need to analyze that what is the supply of that currency in the crypto market. If the currency is easy to dig, easy to mine, and if everyone is available with that resource, if the crypto is not that strong or scarce, the prices is not expected to appreciate in future. The reason why Bitcoin appreciated and gave an exponential return is simply because the bitcoins are very limited, and there are only few of them. That is why owning them is like owning a treasury. So that is what I feel, although I am no expert. This is coming with a disclaimer that I am no expert in crypto market. Coming back to fiscal policies, so how government make their and spending decisions income and expenditure decision is is decided by the fiscal policy, is decided by the fiscal policy. Now tell me, if government are reducing taxes, would it be an expansionary measure or a contractionary measure? If government are reducing taxes, would it be an expansionary measure? Would it help the economy to prosper? Correct. Yes, every one of you are right. Based on the knowledge that we have gained in monetary policy, reducing taxes would be an expansionary measure. People would have more disposable income if taxes are less, and people, if they have more disposable income, they will have more money to spend. More money to spend will create more demand for the product. More demand for the product will increase the prices and increase the transaction in the economy as well. So it is an expansionary measure. It will help the GDP to prosper as well. On the other hand, if government is increasing the taxes, people would have less disposable income. Will have to save more to pay taxes. People will be spending less. And when people spend less, there is a recession in the economy. That is why it is a contractionary measure. Everyone clear with this? Now, now you will be very much comfortable while introducing this to the concept if you have understood monetary policy in true sense. Governments, what are the components of fiscal policy? Government spending. If government is spending more and more and more and more and more, what do you think? Whether it is an expansionary measure or a contractionary measure? Higher government spending is an expansionary measure or a contractionary measure? Obviously, it is an expansionary measure. Government is spending more, building more infrastructure, more people are having employment. With employment comes salary. Salary are able to, people are able to spend more. And when people are able to spend more, there is a prosperity in the economy. And when government spending reduces, it is a contractionary measure. Next, we discussed about taxation. Third one is transfer of payments. Now, have you guys heard about unemployment compensation? What is unemployment compensation? What is unemployment compensation? Very good, AM. Government is responsible to provide employment to their citizen. Government is responsible to provide employment to their citizen. And if if the citizen is unemployed, if the citizen is unemployed, guys, it is government's, it is considered to be government's disability to provide with employment. It is government's disability to provide with the employment benefit. So to compensate for that disability, government provides unemployed people with unemployment compensation for the sustainability of unemployeds. Similarly, government also government also provides subsidies. Government also provides subsidies. So let's suppose, can any government provide employment to unemployment youth in India? Is it possible? Well, it depends. I would give an equal share of credit to both the government and the people of India. We as a citizen should also upskill ourselves, and government on their end should provide us with the opportunities. It is a truth that the skills are not well acquainted in Indian individuals, because of which there is less opportunities in the market. But also those who have skills also tend to suffer to find the jobs. Those who have skills also suffer to find job. And that is why both youth of India and government are equal contributors for the state India is in. Coming back, what are subsidies? How would you define subsidies? What are your idea of subsidies? Yes, Aslam, correct. Every employee was once a fresher, K. Every employee was once a fresher. So if government feels that a section of the economy, if government feels that the section of the economy won't be able to afford the basic necessity, won't be able to afford the basic necessity like electricity. So what government would do is, government would make available electricity that is, let's say, worth 10 rupees per unit in the market to that people at 3 rupees, and the rest 7 rupees will be paid by the government will be the next last 7 rupees of the cost will be borne by the government. And the reason why this 7 rupees of the cost will be borne by the government is because government is responsible for providing the basic necessities of a nation. So subsidies and unemployment compensation that government provides for the welfare of their citizens through various welfare schemes is the example of transfer of payments. These schemes are the example of transfer of payments. So tell me, if transfer of payments are increasing by the government, whether it is an expansionary policy or a contractionary policy. If transfer of payments is increasing by the government, whether it is an expansionary policy or a contractionary policy. If transfer of payments are increasing, government is distributing more money to the people. People will have more money to spend. Increasing transfer of payments would come up with an expansionary policy. Why expansionary policy? Increasing transfer of payments would make people available with more money. People being available with more money will spend more and creating an expansion in the economy. On the other hand, GA, why did you got confused? Now are you clear why it is an expansionary measure? On the other hand, decreasing transfer of payments would be a contractionary measure. Now, there is a concept of automatic stabilizers. There is also a concept of automatic stabilizers. Now, what are automatic stabilizers? Economists believe that fiscal policies and monetary policies are of no use if people are earning more, they will spend more. When they will spend more, demand would increase. When demand would increase, prices would increase and people would be just give me a second. Priyanka is saying, but if you think in that way, if transfer of payment is increased, it means that there are people who can't afford basic needs. Let's, for a minute, let me agree to her that if transfer of payments is increasing, people are not uh, able to afford the basic needs. But using transfer of payments, government is at least trying to make them afford those things, right? Using transfer of payments, government is trying to make them afford those things so that those people could also afford the products, basic necessities of life, and prosper in their life. This is just a push to those people This is just a push to those people so that they could also be doing better in their life. And if they will do better in their life, it would be an expansion. It is an expansionary policy. The reason being the intentions of the government is to expand the economy by creating more and more individuals who are able to afford a standard life. How it is related to a contractionary policy? Government does not want to less spendings of these people. Government does not want these people to spend less, right? Contractionary policies deals with when government want to cut off the demand. If government would have to cut off the demand of electricity, government would have hiked the price of electricity so that only a creamy layer of the population could afford it. But that is not the case. Government want everyone to afford it, and that is why it is an example of expansionary policy. In a contractionary policy, it would have hiked the prices so that not everyone could afford it, and a creamy layer would afford it, and that would reduce the spending of the people. But here, government is pushing the people to spend more. So that is why it is an example of expansionary policy, Priyanka. Every year transfer of payment is good for economy or bad for economy. Well, it depends on the income inequality that is created in the uh, economy. So if there is high income inequality and government is not providing with transfer of payments, it means that government has turned off their eyes and only favoring the uh, best of the population, or top few percentage of the population who is contributing to the nation's wealth. On the other hand, it is also great if there is no need of transfer of payments. If uh, there are more and more people coming out of the below poverty line threshold level, if there are more and more people coming out of below poverty line threshold level, in that case, there is no need of transfer of payments, and that is a good sign for a nation to be in. That is a good path for a nation to be in. Now, yes, because of transfer of payments as well, inflation is increasing. Spend higher. Earnings are high. If earnings are high, people will spend higher. Demand will be higher. Prices will be higher. Savings will be less. If savings are less, investment will be less. Businesses will have less capital. If I don't invest, if if common people won't invest in a business, businesses will have low capital. It would make lower profit. Let me complete automatic stabilizer and I'll get to it. Is there any country that has no poverty? I'm not sure about it. I don't think there is any country which has no poverty. Every country is facing challenges of poverty. Well, definition of poverty is different for country to country. I'll come to that, Aslam. Just give me a second. Let me complete this. Profit is decreasing. Profit is decreasing. Businesses will cut costs, cut costs, spend less, salary would be less, and people would earn less. When people earn less, they spend less, demand falls, demand falls, prices decrease, save people are able to save more. So what it is happening, this is becoming cycle. They will earn higher, spend higher, demand would be higher, and prices would be higher. Savings would be less, investment would be less, and capital would be less capital would be available to the business. It will lead to finally less spending by the people, less spending by the businesses, less earning by the people, and that would uh, decrease the demand and reduce the prices. So the inflation was a concern due to high earnings. Inflation and falling prices has automatically stabilized itself. So, so economists, some of the economists believe that government don't need to intervene in through monetary or fiscal policies, because economy follows a cycle, and that is called economic cycle, and economy is sufficient enough to manage itself through with the help of automatic stabilizer. With the help of automatic stabilizer, business is able to, or economy is able to manage itself on its own. The other thing is, okay, Aslam is saying, is there any country that has no poverty? Well, the definition of poverty will differ from country to country. For a country like India, anyone would be earning more than 3 lakh rupees or 2 lakh rupees or 1.5 lakh rupees would be above the poverty line. On the other hand, compared to Indian rupees, if people earning 5 lakh or 6 lakh rupees in US would be below the poverty line. So definition of poverty is different from country to country, but every country faces the challenge of poverty. Next is infrastructure investment. If government is spending more in infrastructure, they are in favor of expansionary fiscal policies. If there now again and again there is something called as counter cyclical fiscal policy. So if infrastructure investment is not clear, if government is investing highly in infrastructure, don't you think they are trying to expand the business, expand providing people with jobs? Last point is not clear. Fourth point, automatic stabilizers. Automatic stabilizers says that, Priyanka, just think about it. Automatically stabilizer says that economy will automatically stabilize itself. There is no need to come up with a different monetary and fiscal policy because both monetary and fiscal policy faces a lag. Both monetary and fiscal policy faces a lag. So you don't need to come up with any monetary or fiscal policy. Eventually, economy will automatically stabilize itself. Infrastructure investment, if government is spending more, they are in an expansionary zone. Counter cyclical fiscal policy refers to what is the third point? Automatic stabilizers. No, this is one school of thought that is provocated by the economist. Being a student or being a learner of economy, you can have your own opinion about it. So one opinion says that there are automatic stabilizers available in the economy. Till what extent it is proven? There have been reports that says that, yeah, in the long run, automatic economy stabilizes itself, but but government should not wait and watch the scenario because it would lead to a longer period of economic turmoil. People would be in a distress zone for a longer period of time and government cannot sit and watch that happening. So that is why the mention all 5 points, such mention. Don't explain such mention. Sorry, PJ, I'm not clear what you're trying to say. Mention all 5 points, don't explain such mention. Okay. So this is how automatic stabilizers work. Then if government is promoting counter cyclical fiscal policy, okay, just a second, guys. First one was taxation. Second one was government spending, transfer of payments, automatic stabilizer. Infrastructure investment, counter cyclical fiscal policy deals with if economy is facing higher growth phase, then government would want prices to cool down. So they would follow a contractionary fiscal policy. If again economy is in recession, it will follow an expansionary fiscal policy so that as a counter cyclical response. If economy is in lower end of the cycle, then government would want economy to expand. If economy is bursting or heating up to the upper end of the cycle, government would follow a contractionary policy. That is what counter-cyclical policy deals with. Seventh one is tax credit and incentives. If tax credit and incentives are higher, government is promoting expansionary policies. Along with this, The eighth one is welfare programs. So along with welfare programs, if government is coming up with policies with higher and higher welfare program, they are going with expansionary policy. So guys, do you think that we are going a bit fast? Because I think this is pretty much, all these points are pretty much intuitive. The reason it is a need of an hour to go fast. Tax credit incentives. Let's suppose that if government is allowing, let's suppose the total tax liability for you for this year is 1 lakh rupees, and government is allowing you to pay 30% for this, 30% of it this year, and the rest 70% next year. It means that government is planning or positioning to give you, government is planning and positioning to give you tax credit incentives. That is promoting expansionary fiscal policies. That is tax credit incentives. Counter cyclical policy. Counter cyclical policy is something that if economy is heating up, government would want it to cool down using contractionary fiscal policies. And if the economy is in turmoil, government would want to boost economy through expansionary fiscal policies. Cross 7 lakh slab in a year, then there is a tax deduction, right? But along with that, there is also some of the investments that you can make, which can save your taxes beyond 7 lakhs as well. Then there are tax credit incentives and welfare programs, same like subsidies or balance of payments. Welfare programs organized by government is with respect to increasing economy or boosting up the economy. Now there is something called as discretionary fiscal policy as well. Based on discretionary fiscal policy, examples of welfare programs like government promotes girl education, and there are some welfare schemes which allows people to invest in those schemes and offer a higher return. They like Sukanya Samriddhi Yojana in India, and there are other schemes as well which promotes or government could organize, like there was COVID, right? In COVID, government organized medication for free. The vaccines were free for all Indians. Government, this was the part of government welfare program. If Indians would have spent that amount, it would have not allowed them to spend those amount in somewhere else. So that makes welfare programs an example of expansionary fiscal policies. And sir, a country can give, and sir, and can a country take loan? Yes, they can. The country can give and take loan as well. There is an institution called World Bank which provides loans to deprived countries or countries with the need of funds. Discretionary fiscal policy. India has taken debt, but I'm not well updated with what is the level of debt that India has taken. Again, I am repeating counter cyclical policy. Counter cyclical policy, I repeated a couple of minutes ago as well. If Nandini, the economy is in turmoil, if the economy is in turmoil, would you want the economy to expand or collapse? If the economy is in turmoil, would you want economy to expand, right? And how would you expand the economy? Using expansionary policy or contractionary policy? Using expansionary policy. So counter cyclical policy is, if the economy is in the lower end of the cycle, if the economy is in the lower end of the cycle, you would take expansionary measures to rise the economy. If economy is in the heated edge of the cycle, you would take policy to cool down the economy. That is contractionary over here and expansionary over here. That is counter cyclical. This is cyclical, and to change this cyclicity, counter cyclical measures are taken. Should not lead to expansion of economy, as how long can government bear the cost to provide subsidies, and then eventually they would have to increase the tax rate to increase the revenue, which will contract the economy. Yes, it depends. Again, I said it depends. If the government are if there is income inequality in the country, it means that one who is rich is getting more richer. Then government are able to collect taxes from those people, and it is the responsibility of the government to distribute that taxes to the common people as well, those who are deprived of those resources. So that is why, and if there is no income inequality, if there is no income inequality, even the poor is rising as the rich are rising, so government would have to provide with subsidies in the longer run. So both the things set off itself automatically. Coming to, yes, discretionary fiscal policy. Here, government makes government makes discretionary fiscal policies are just like opposite of automatic stabilizer. Earlier in automatic stabilizer, we saw that economy will automatically stabilize itself. But on the other hand, when it comes to discretionary fiscal policy, government will make intuitive measure to the economy. Government will make intuitive measure to the economy, like government will actively involved in decision making process. Government will see that the policies are implemented quickly. They will implement or carry out efforts so that the policies are implemented quickly. Government will see that the policies that they have made are flexible. Are flexible, it means that if, let's suppose, the economy is in if if the economy is growing up, and people are making use of the policies that government made, so the policies of government are working, so they will make sure that it should not happen that they have projected the economy to prosper at this level and economy prospered till this, because that would eventually lead to inflation. So the policies that will be made by government will be flexible in all the scenarios, and that that would be then objective of discretionary fiscal policy that would be made by the government. And the policies that here we use, the discretionary policy that the government would use, is again all the tools that we saw, that tax credit incentives, infrastructure, counter cyclical demand is the example of automatic stabilizers, welfare programs, is government that would do for, and with this it would help the common people or the economy to stabilize automatically. The tools, discretionary tools, are taxations, that is in the hands of government. Government spendings is in the hands of government. Transfer of payments is in the hands of government. And transfer of payments would help in automatic stabilizers actually, if you see. So when transfer of payments, why it is an example of automatic stabilizer? Because if more people are unemployed, there would be more transfer of payments. When there are more transfer of payments, people will get an opportunity to upskill themselves, or else they will get an opportunity to do some work, like open a short small business or something. And based on that, it will give a push to people to go towards employment. And when people are employed, transfer of payments would reduce automatically. So that is why transfer of payments is the example of automatic stabilizers. So these policy tools that we saw, like taxing power, infrastructure development, uh, increasing or decreasing taxations, uh, spending on infrastructures, also preparing for government spendings. These are the tools that discretionary tools that government would use. So we saw automatic stabilizers, we saw discretionary fiscal policies. Now let us move on to the principle of sound taxation system. Guys, would it be okay if we increase, if we just uh, expand 10 minutes more? Would it be okay? So the last topic for the day is principles of sound. Last or second last, let's see how much time does it takes. Taxation systems. The principle of sound taxation systems. The taxation system should be fair and promoting equality. It should not be like a one set of people would be suffering more compared to the other set of people. Also similar, everyone earning in a particular bracket should have the same, should take same taxes. If I am getting 7 lakh rupees or someone else's from whatever community, whatever gender that person maybe is getting 7 lakh rupees, both should have same taxes. That is fairness and equality. Tax system should be efficient. It should not be just on the bookish nature. So what I mean is government should be able to collect tax. It should be practically possible to collect tax. It should be simple to understand. Tax system should be simple to understand to the common people. It should be transparent among the citizen. It should be stable and also predictable. Now, why a tax system should be predictable? Because let's say you are earning 60 lakh rupees per year. Let's say my package is 60 lakh rupees per year that I am earning. And I have saved money 6 lakh rupees, 6 lakh rupees based on 10% tax rate. What is the prevailing tax rate in the economy? And all of a sudden, government spending on infrastructure, they give project to private company. So this company gives some percentage to, yes, definitely the income that they would make will be, government would have a share in it, right? So why a tax system should be stable and predictable? Because let's say I am making 60 lakh rupees and I have say 66 lakh, that is 10% of that taxes, because I am seeing that the taxes in the economy is 10% for my tax slab. This is just an assumption. Now, what if government increases that tax slab to 30% or 50% within a given fiscal year? So that would be inappropriate for me. I won't be able to predict those tax. It would create a distortment in the economy. And that's the reason being a tax system should be predictable and stable. Think it point of view from anticipated and unanticipated inflation. If there are higher taxes, there would be challenges in your planning. Then tax system should be adequate, means sufficient enough to fund government spendings. It should be neutral to all. It should not be partial. It should cover broad set of population. It means that it shouldn't be like a given 2% of population are paying tax and they are managing all the expenses of a given country. It should not happen. It should cover a broader population. Tax system should be flexible as well. Means it could be changed. Yeah, I agree with you, VT. Tax amount deduction also depends on individual earning. So that is what fairness is, right? If you are earning more, you are expected to pay more tax. This is because, so there are various debates to it. Some people, and again, there are some countries that follow flat tax rate, some countries that follow progressive tax rate. That is, one who is earning more should pay a more percentage of tax. But that is with respect to various debates. That would be a bit controversial, that which policies are better and which would be not. That is a matter of debate. Uh, One school of thought says that having a progressive tax rate, it means that people who are get paying more percentage of their total income as tax is uh, is demotivating them to work hard and earn more. Whereas others says that when people earn more, they have earned more due to someone has paid them, and it is the right of their people that the wealth should be distributed among the economy has been unfair, the country has been unfair to those people who is earning more. So this is one school of thought. This is not what I say, but one school of thought says in economy. So that is why progressive tax structure is something that is fair enough. It should be feasible. It means that there should be a taxing authority established to collect those taxes. It should be competitive as well. Taxing, it should it should not be competitive, but it should incorporate competitiveness. Now, what I mean by this, if there is a country with greater competition, if there is a country with greater competition, government of that country should reduce taxes so that flexible flexible means tax rates could be increased or decreased according to the choice of the government, according to the position of the economy. Feasible means there should be sufficient authority in in place so that government should be able to collect taxes. It should be enforceable and administratively feasible. Okay, tax rate should be enforceable. It means that there should be proper laws and regulations that should be made which allows people of the citizen to pay taxes, and that is what this feasible means. Now, if there is greater competition in an economy, government should reduce taxes for the people and the businesses in that economy. Why? Otherwise, already there is so much of competition. There won't be foreign players interested to invest in the business, and foreign players investing in the given economy or the domestic economy invites employment to the people. Tax-free country in all business person and salaried person. To be very honest, I don't have the idea about the tax slab that is prevailing in US. Although, if you will ask me, I'll get back to you researching about it. Those who have any idea about whether Dubai is tax-free for everyone or not, please let me know. Then there is minimum distortions. It means that the taxes should create minimum distortions in the economic behavior. It means that if there is a person earning 7 lakh rupees and you are making him tax free, and if there is a person who is earning 15 lakh rupees and you are charging them 30% tax, it should not happen that it should not happen ideally that this person should be compensated for earning more. This person should be compensated for earning more. Let's say 50%. If you are charging 50%. So ultimately, he will also be making 7.5 lakh of disposable income. His lifestyle, his lifestyle should not change. Lifestyle offer should not change by paying tax. Lifestyle of a person should not change because of paying tax. I'm not sure about it, Aslam. So, guys, did Tata Group and Ambani's, all these people shifted to Dubai just for the sake of taking tax advantage? I am not sure about it, although I'll read about it if that is the case. Tax rates should be sustainable as well. Tax rates should be sustainable as well. It means that it should be enforceable for a longer period of time. So that was all. That was all about the principles of a sound taxation system. With this, we are almost done with fiscal policies. We are just remaining with advantages and disadvantages that we will be completing in the next 15 minutes of 15 minutes of the next class. He will shift if inheritance tax will be implemented. Okay. So Aslam, yes, now I got it. So there was a buzz in the market that inheritance tax will be implemented. And if inheritance tax will be implemented, uh, these people will shift to different countries. That is the case. Yes, that is the case. But ideally, as of now, they have not shifted. They will be shifting to different countries. These are just the speculations made by the people. I have shared the sheet in the chat box. Please go through that. Those who have connected from the laptops, make sure that you have received that sheet. It was wonderful having a session with you. I hope you enjoyed the session. Thanks a lot. Yes, the sheets will also be shared on the LMS as well. Thank you guys. Thanks for being such a wonderful crowd. Don't worry, those who have joined through mobile will get the sheet on the LMS. Asit, please connect, please raise a ticket about it, and that ticket will be forwarded to the respective team and they will get in touch with you. Yes, yes, you will get those notes. Let me be completed with everything by the next class and I will provide you with the notes. KG, please raise a ticket about this as well for the interview questions that you want. I will share your question bank. I don't worry, I will upload. I will try to get a question bank uploaded on LMS. We will be starting with derivatives in the next class after done with advantages and disadvantages of fiscal policy. So that was all it for today, guys. Thank you. Thanks a lot for being such a wonderful crowd. So KG, you wanted some questions, right? That could be asked in interview. So I will share you the list of those questions that could be asked in interview. Don't worry about it. Yes, yes, the sessions are recorded. You can go through the recorded sessions on the LMS. So thank you guys. Bye-bye. Have fun. Yes, yes, the interview questions will also be uploaded on the LMS. Don't worry. Bye-bye. Take care. Have fun.